Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Monday, June 29th, 2026, and despite some flare ups this weekend, markets seem poised to keep calm and carry on, especially with a focus on a very action packed, dense economic calendar this week. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. As I alluded to earlier, we had a flare up in hostilities between the US and Iran over the weekend. Stop me if you've heard this one before, but heading into the new week and cynically the reopening of the markets, we see a new ceasefire in place between the US and Iran, and technical talks over nuclear issues appear poised to go forward starting tomorrow in Doha. Frankly, markets have done this song and dance before and they've mostly shrugged it off. We can see the NASDAQ is rising 1%. Oil is bumping up 1%, but not too big of a move, right around that $70 level. Gold is on the back foot, more on that momentarily, and the US dollar is flat heading into the US Open. And boy, will it be an action-packed middle of the week. That's, of course, because we have the U.S. holiday on Friday that pulls forward the highly anticipated non-farm payrolls employment report to Thursday. We'll also get CPI data out of Europe and the manufacturing PMI out of the U.S. on Wednesday. And then the other thing to watch will be the ECB's annual conference, at which we'll see the heads of the Fed, the ECB, the Bank of England, the Bank of Canada, a lot of major central bankers will be speaking, laying out their ideas about monetary policy. And frankly, for traders, what matters is whether they'll be looking to raise interest rates aggressively for the rest of this year. So make sure you have that marked in your calendar. Today's chart of the day is gold. Very interesting chart here on a daily basis. We can see gold has been trending lower. It's been putting in lower lows and lower highs since peaking back in January. It did break now down to about a 7 or 8 month low here under 4,100, and that's going to be a key level to watch. However, we have conflicting technical signals. The longer term trend is certainly shifting to the downside. We can see that with the death cross of the 50-day exponential moving average below the 200-day moving average. But in the short term, there is a case for a bounce if we can get above that 4,100 level. One thing that supports that view is the bullish divergence that we're seeing in the 14-day RSI. Here on the sub panel, you can see the RSI made a higher low, whereas price made a lower low. This tells us that the selling pressure on the most recent low, that foray down below the 4,000 level, was not as strong as the selling that we saw earlier, and perhaps might be poised for a bigger bounce. That said, across a medium and longer term perspective, I think a bearish bias on gold is appropriate, and as long as it remains below some of those key longer term moving averages, markets may remain in a sell rally mode, especially if we start to bump up toward previous support turned resistance closer to 43.80 or so. So those are the key levels I'll be watching for gold as we move through this next week and beyond. Thank you for carving a couple minutes out of your day to watch this video. If I can ask one quick favor before you go, please do drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trading this week.